Okay, so let's move on to the next trade now. This is going to be a live trade in the market with broker execution. So watch carefully to see exactly how I put on, manage, and exit the trade with broker execution. Here's trade 5. Okay, so we've got GBP against US dollar on the 5-minute time frame. Now we've got an A, B, C, D forming here. So let me just quickly work out the points so we can put in the order and then we'll go through the trade in more detail. So we've got the A point here at 1.4883. We've got the B point at 1.4860. We've got the C point at 1.4880. And based on those numbers, we've got a difference in pips between point A and point B of 23 pips. Therefore, point D is 23 pips lower than point C. So if point C is at 1.4880, we have point D at 1.4857. So if we're going to be going in at point D, first we need to just double check that is our retracement violating the 90%, and we see that it is not. So we're good there. So let's quickly work out our trade size amount. But first of all, where are we going to be putting our stop? Well, we've got this pivot low here, and that is actually quite far away. We may want to put our stop 50% away. So let's say 50% of 23. Well, let's say 50% of 24. Let's just round it up because we're going to get half a pip then. We're not going to get a full pip amount. So 24 divided by 2 is 12. 12 pips lower than 57 will take us down to 45. So 1.4845. So because we're so close to this low here, we would put our stop below this low. And the reason for that is at 39, we are only 18 pips away from entry. And that is just over the 75% mark. And because it is just over the 75% mark, why not put it under a pivot low where we know that there is demand at this level? So let's go in for that. Let's find out how much we should be trading. So here we are on the trade size calculator. So we've got a $50,000 account. Let's say we want to risk 2%. This is GBP against US dollar. Our entry price is 1.4859, 2 pips higher than the market price. And our stop will be at 1.4838, which is 1 pip lower than the market price. And that is an amount of 476,190. So let's just do 480,000. So we right click on GBP USD. Create entry order. We want to buy 480,000 at 1.4859, and our stop should be at 1.4838. We click OK, and so we're going to wait for this buy price to come down to 5.9, so it's just under 10 pips away. So let's wait and see what happens with this. If price does come down to 5.7, then we would be entering for a long. So let's wait and see what happens here. So we seem to be getting into our entry price right now. So we just need this to go to a 5.9. It's at 60 right now. It's at 5.9.6. Just need to, there you go. We just got in when it went down through 5.9, and so we're in for a long at 1.4859. Our stop is at 1.4838. Now that we're in, let's take a look at the trade. So as you can see, we've got a nice uptrend going on here. Our MAs are all in the right position. They're all trending up. Now if we look closer at the trade, I already did the retracement tool to show that the C point does not break the 90% mark, so it's a valid play. So what we've got here is an A to B, a B to C, and a C to D. We're obviously looking for prices to go up, which agree with the uptrend. So that makes it a strategy 2 trade. We entered at the D point and our stop is below the previous pivot low. Now this previous pivot low is just outside of the 75% of the C to D leg away from entry. Now as per the rules, we would therefore then put it at 50%. The stop will be at 50% of the C to D leg from the entry point, which was around about this price here. Now because we already had a pivot low here, and obviously putting it below pivot lows are a bit more powerful. There are prices where the market has shown demand, and therefore putting it below these points make the position of your stop a bit better. So it was at around about 78% instead of 75%. So if it's around about that 75% mark, then it's fine, you can put it there. If it was way too far out, then you can place it at the 50% mark. But because we were so close to it, we placed it under the pivot low. So let's see how this trade unfolds. I'm going to pause the video and I'll restart it in a few minutes. Okay, and we see that price just came shooting down, went right through our stop point, and we are now out of the trade at a loss. So obviously when you change the amount, that 2% mark, it does fluctuate slightly, but it is around that 2% mark. And so this was a losing trade, and as you can see, when you lose, you pretty much lose straight away, so you know you're wrong and should be out of the trade. And that's the way trading goes. You need to take the losses. These losses are a part of the game. You're going to go through those losses. You are going to have losing trades, and it's fine. So this was one of those losing trades that we just stack them up as they keep coming through, because as the losing trades come in, your winners are going to follow. And with risk reward and with probability on our side, we are going to be making money overall. So these losses have to be made. So don't think that you're going to be winning on every single trade. You're not supposed to. And if you are making a lot of wins in a row, be careful. Don't become complacent and understand that the losses have to come. They're part of the whole game. And that's just the way it is. Learn to accept losers, learn to have losers, and that's why I'm glad that I recorded a losing trade, because I want you to understand that this is a professional way to make money from home, and we don't just always constantly make money. I want this trading to be as realistic as possible. You have to have those losers. I'm not here to tell you that you're going to make money on every single trade. You're not supposed to make money on every single trade. You're supposed to make money overall in your trading, but not on every single trade. So I want that factor of realism to be in this training, and I want to show you that you can lose money in the market as well. As long as you're following the rules, you're going to make more money than you lose, and you're going to be up overall. So that was a losing trade here, and so let's move on and look out for some more trades.